Hi, I am Pankaj Gupta. Today's video is to examine relation of India and US stock market. We are going to evaluate how one market's movement affects another market's movement, and particularly whether US market's movement has an impact on India's stock market movement or not. Now we are going to evaluate Nifty and Dow, how their performance has been, how their what is the CAGR of Nifty and Dow, what is the trend correlation, whether Dow up, Nifty up, or Nifty up, Dow up, or Dow down, Nifty down, whether can we draw some correlation, how much is the movement, whether their movement is same or whether the movement is different. So I mean, Nifty up 10% means Dow up 20%, or Dow up 10%, or Dow up 10% means Nifty up 10%. It is same or different, and if it is different, how much is the difference? So let's get started with the first point, which is CAGR. Now this table shows Nifty and Dow CAGR for the last 27 years. So I don't know whether it will be a surprise to you or not, but Nifty has outperformed Dow on a constant basis. So Nifty's CAGR is almost double than Dow if we take last 27 years period. Dow is at 7% and Nifty is at 12%. If you invest in US market, you get 7%. If you invest in India's market, you get 12%. Now let's further see how this CAGR appreciation or Nifty's CAGR evolution has taken place. If we see this table, which is bifurcated into 5 years block, so all the 5 years block, Nifty has consistently given almost double the returns which Dow has given, except for the first block of 96 to 2000. So out of 27 years, first 5 years Dow outperformed, and post 2000, all 22 years, Nifty outperformed, and outperformed in a big way. Now in future, whether you want to follow the first 5 years 96 to 2000 or last 22 years, that decision I'll leave up to you. But this table surely says Nifty is a extremely outperforming index than Dow, or India is a highly outperformed market than US. Okay. Next point. Can we draw some trend correlation with US and India? I mean, when US going up, India going up, or US going down, India going down. Now this table says out of 19 years when Dow closed positive, Nifty closed positive for 17 years. So we can safely draw an assumption that US is going up, 90% chances Nifty will also go up. Now the other side, if US or Dow going down, will Nifty go down? This table says out of 8 years when Dow fell or Dow closed on negative, Nifty closed negative only for 4 years. So 50% correlation. So in simple words, Dow up, Nifty up, 90% chances. Dow down, Nifty down, 50% chances. Next point. How much is the movement difference? Whether they same, whether they move in same speed or same quantum, Nifty and Dow, or is there a difference? Now this table again shows out of those last 27 years, 14 years, that is more than 50% of the time, the movement variation or the movement difference has been more than 20%. Now, so this means Dow up 10%, Nifty up 30% is a possibility. Dow down 10%, Nifty up 10% is also a possibility. And that possibility is for more than 50%. Now 20% is a very big number. Most of the investors look for a number in around 20% when they invest in stock market. So if you are putting a Nifty's upside number considering Dow's upside number, then that investment strategy is actually doomed, because this table shows most of the time variation or movement difference will be more than 20%. So either you will miss out those 20% or you will actually end up taking a 20% loss. So let's evaluate these 14 cases or 14 years when the variation has been more than 20%. Let's see the positive side first. So this table shows Nifty's max positive movement against Dow's movement, which is around 57%, which happened in 2009. Dow was up 19%, Nifty was up 76%. So Nifty gave 4 times the return which Dow gave in 2009. So other 4 years, Nifty's return were higher by 40% than Dow's return. And last 4 years, Nifty's return have been more than 20% than Dow's return. Negative side. The maximum underperformance of Nifty or the maximum negative variation of Nifty versus Dow has been 34%, which happened way back in 98, when Dow was up 16% and Nifty was down 18%. Other than that, 2 years the variation was around 25 to 30% negative side, and 2 years the variation was around or less than 20%. So this is how the variation is going to play out. So that's all about the data. Now, what are the key takeaways from this data? First and foremost, on CAGR front, Nifty outperforms Dow, no doubt in that. Second conclusion, Dow up, Nifty up, more than around 90% surety. Third, Dow down, Nifty down is 50-50 scenario. So I would suggest not to draw an investment strategy of Nifty going down when Dow is down, because that's only 50%. Nifty and Dow's move will never be equal. It has never been equal in the last 27 years, and it will be foolish to expect that it will be equal in years to come. Very high chances of more than 20% variation. We have seen variation of up to 50% also, both on positive side or negative side. And lastly, Nifty being a outperforming index, Nifty's positive variation both in terms of number of years as well as in quantum of variation is higher than the negative variation. So this is all about Nifty versus Dow's movement. So I hope this data is useful, and what investment strategy to draw considering this data, I leave that decision to all my viewers. Thank you. Thanks for watching. Any queries or questions, please feel free to contact. Thank you.